You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to rock out with hopefully your favorite bi-weekly options program. Yes, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And, of course, you guys know where to get us. Look for the archives and all that good stuff over there on iTunes, TuneIn, Stitcher, our website, as well as via our mobile app. You can always join us live as well on the old Mixlr, MIXLR. Grab that link every Monday, Thursday, 3 p.m. Central, 4 p.m. Eastern. Set it and forget it. You get some surprises during the week, as we had a tech show earlier this week we did live. We'll do a bunch of stuff on Friday as well. So you get a lot of fun stuff on the Mixlr throughout the week, not just the old option block, even though this is the fun one as well. And of course, however you listen live after the fact, hit us up and play along with our polls over there at Options. Give Uncle Mike some insight into his directionless existence. All right. And speaking of Uncle Mike, let's bring him on to the panel. Let's see if he can figure out his way with our help, a little bit of guidance from us. Uncle Mike Tosaw from RCM Wealth Advisors. Welcome back to the program, sir.
I have an existence and I have direction. I'm just going to leave it at that. And my direction today is umbrage.
Uh-oh. He's umbrage centric already. And let's spin the wheel. Let's see who else we got joining us today. It's always a mystery who's on the other end of the line and where they are. Maybe they're freezing to death in a Costco parking lot or shopping for beans in the aforementioned Costco, or perhaps out clamming on the scenic shores of Maine. You never know who's going to pop up on the old option block today. Let's see who we got. Is that the Rock Lobster joining us over there in yon shores of Maine? I'll take his resounding silence as a no. Mr. Rock Lobster, are you there, sir? Going once. Going twice. All right. We're going to figure out, well, actually, he's going to figure out his connectivity situation. You know, Maine, they still haven't mastered this whole 21st century thing known as the old internet. While he gets his stuff sorted out, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name says, this is the portion of the show where we break down what was moving, shaking, rocking, rolling. A lot of things moving and shaking today, mostly to the upside. There's a lot of green on the old screen as the continued trade wars, they seem to have been calmed, mitigated somewhat by some more conciliatory tone coming out of China. Of course, they were ratcheted up a little bit, not on the trade war side, but more on just the international volatility side and a general macro concern side with the escalation of tensions in Syria, a bit of a yin and a yang, a teeter-totter there. Which one would win? Well, it seems like the calming effect was in full driver's seat today. Most of the major indices rally ho today, up 1%, if not more. S&P kind of the Goldilocks, up right around 1% to finish off the day. The Qs and the Dow up well over 1%. And of course, all this green means ye old VIX cash taking a break on the old show today. And so So taking a break on the old market today as well. And interesting stuff nonetheless. A lot of green on the old screen. Mr. Uncle Mike, this has got to bring a smile to your face. You are our, I won't say our degenerate bull. I will say you are our bull in residence here on the old program. Does this put a smile on your face, all this green, sir?
It does. I think with today's action, what's interesting about it is that we've been kind of range bound in the S&P for the past couple weeks, and today we broke out of the range a little, at least in SPY, we broke out of it for a little bit during the day, but overall the range with which we have been in since, looking back here, roughly the 23rd of March, we're still in it at this point. Now, will earnings be the thing that gets us out of this range in the next few days? We will see. And but for right now, we're still in the range. But me being the bullet I am, it's always more fun to be at the top of the range, I suppose.
That it is. You know what else is on the top of the range today, Uncle Mike? Oh, before we even get to that, we'll get to that in a second. But first, I want to break down listeners. Uncle Mike put it out for you guys today to help dictate. It is Thursday. It is strategy block time. So he's going to percolate in his brain of brains over there and ruminate on what it is he wants to instruct you all on today and perhaps explain for you guys. Excuse me. So in order to make it easier for him, he's actually, and give you guys a little bit of fun ownership of the old process, he's actually put out 4 suggestions. You guys listening live and playing along who follow us on social media, you guys can vote after the fact on the podcast. Unfortunately, it'll be all said and done because we'll know the answer in about half an hour or so. But he gave you 4 choices. The choices were today, when to close out your shorts, hedging with options versus using a stop loss order in a stock, how to trade collars with a portfolio margin account. By the way, that one kind of challenging to fit into the Twitter character limit, and selling covered calls in a downward market effectively when you're below your entry point. Uncle Mike, what do you think is winning in the early voting, sir?
I'm going to guess the collars in a portfolio margin account. That's just my guess.
It's doing all right. That's that 25% of the votes. Number right behind it will be covered calls in the falling market. That's 24%. And then I don't know what's going on the background here, listeners. All sorts of craziness going on in the show chat behind the scenes. We'll get it sorted out. It's very distracting. And then number 1 is actually when to close out your option shorts, Uncle Mike, with 38%. So that's in the lead right now. That could all change as we go on with the show. Is that cool with you, sir? Does that work with your planning?
I will give the people what they want. I am a man of the people.
All right, well, you guys got some time if you're listening live or you just follow us on social media. Get those votes in there now. We got about half an hour, 25 minutes until Uncle Mike starts holding court on all things options out there. And of course, you mentioned before about things in rally hold mode. Uncle Mike, one thing that was rally ho today was just crypto. All things freaking crypto, just on the tier. I've heard a lot of different spec. I was at a conference all day, so I didn't have a chance to really have my eyes glued to the screen. In fact, I just broke away from the conference right now to run over here and host the show. But I was getting hit up a lot intraday with, hey, you seeing this crypto? You seeing this crypto spiking over 1,000 handles intraday on the Bitcoin, the futures over there on the SIBO right now, ending the session up, about 760 handles. They had actually over 1,000 handle range. Looks like about 1,100, actually, 1,140 or so points out there, as low as into 6,900s, as high as 8,000, almost 8,100. So a nice intraday pop. I've heard different reasoning for why crypto was on such a bull move today. Some people saying it was the approval of crypto for some Sharia use case. It doesn't take a lot to really move the needle in crypto land. So people trying to search for these fundamental or technical reasons why it rallied. I don't know if there are really any. Today was the day. Uncle Mike is speaking of today, is today the day that you finally add some Bitcoin futures to the strategic night portfolio?
No, I think that there is a purpose for being long Bitcoin, and that's if you're trying to purposely get even with someone who has bullied you in the past, you break into their account and get long Bitcoin. That's my opinion of it.
It is. Yeah, I didn't expect it to be a part of the core holdings out there. What could be a core holding for a lot of people out there, Uncle Mike, and perhaps even for you as well are the whole universe of volatility ETPs and just ETFs in general. You guys know I went to the big Inside ETFs conference a few months back, trying to take a peek behind the curtain on all things ETF options and also the underlying ETFs. I know a lot of you guys sling these things these days. I think some stats coming out now about 70% of equity options value can really be traced to ETF products in some way, shape, or form. So clearly, you guys like and use your ETF options, and they're your preferred vehicle, whether it's your SPYs or the Qs or a bunch of other products out there, your VXXs, which is, again, more of an ETN, but still, to each their own. Let's put them all under the whole umbrella of ETPs. Well, the folks at ETFs.com breaking down what's been the hot sectors so far for the year in terms of the biggest performing, biggest movers in general. I think, as it probably doesn't come out to surprise you, that the vol space, particularly the long vol space, looking pretty good. We got our old friends over there at the RexShares, their VolMax Long VIX Weekly Future Strategy ETF, aka VMAX, up a whopping 98% year to date. Again, just look at the VIX chart. You can kind of see what's going on with there. The UVIXI, another one you guys like to play with, up 88% this year. Our old friend TVIX, which you thought kind of had been wound down. I knew it hadn't, but you kind of hoped it did because it was the first of these vol ETPs to really undergo a debacle. And this is well before we saw, the SVXYs and the XIVs all kind of have their own issues. VXX also up 74%. That's a big vehicle for a lot of you guys on both sides, on the upside, and of course, a lot of you betting on the inevitable erosion to the downside as well. And then let's scroll down here. The bottom of the bottom of this list, Uncle Mike. Oh, one of your favorites, Uncle Mike. The old Ultra Bloomberg Crude Oil UCO Pro Shares, only up a whopping 19% so far this year. Any surprises for you there? Obviously, probably not surprising you, Uncle Mike. Hey, there's a surprise for you. The Beta Cocoa ETN up 32%. Chalk. So there you go. Is that a core holding for the strategic night, sir?
I knew we should have gotten long cocoa. It doesn't sound like much. Just like you had said, in terms of looking at the VIX charts, can't say that it's too surprised with the information that you had just relayed. And I just getting back to Bitcoin real quick. I just want to emphasize one other point to ponder on that. Yes, Bitcoin did have a big update today, but that makes it only, I believe, down 47%. Since it became tradable back in December. So I just want to emphasize that I'm hoping that options can come out on that pretty soon, because I would really like to buy some puts or a put spread or something to that effect on it.
Yeah, I think we're all share that kind of Buffett sentiment that we all like to be short at maybe not these levels as much, but still we all like to have express some sentiment in it. But we don't come out and naked short it because that way lies madness. A lot of people pumping around this stat about the big move today for Bitcoin. This is kind of what I reiterated before with the whole Bitcoin declared halal and holy for the Islamic community. So they're saying that opens it up to potentially an additional 1.8 billion people who can now come in and experience the joy that is getting long crypto for themselves. Because we all know once it's approved, that all those people are instantly going to buy it. So therefore, that's worth 1,000 handles. Are you buying this? What people are selling here? Or have you kind of just washed your hands of trying to really make any sense of the movements in crypto at this point?
There's a gentleman that actually has come to my option club a couple times, and he is very much into crypto, meaning he is actually invested in the process of mining Bitcoin. It's actually a very fascinating process, and he's not just invested in Bitcoin, he's invested in all crypto. So I've actually learned quite a bit from him with how it's going. But the one thing that I always keep coming back to is that the U.S. government is pretty powerful. And if the U.S. government doesn't want another currency, they still want the dollar to be the world currency, so to speak. They're going to take some pretty big steps to make that happen. And I still believe that the U.S. government is much bigger than Bitcoin. So in the end, I mean, maybe as a tradable thing in the near term, I don't think it's necessarily a bad thing. You could make a case to where this is one you could be long, be short in the near term on the futures. If you're trading it, that's one thing. But just as an overall investment, I've been wrong in the past. As Mark will remind everybody of my call on Cisco about 8 years ago or whatever, at every opportunity with which he can get. But I really feel that being long Bitcoin is not a wise move.
Of course, Bitcoin, it gets all the headlines, but other cryptos are moving too. Ethereum spiked over 10%. It's been hovering around the 400 level for the better part of the past month or so, and up to 465 intraday at one point today. So that's over 12%. So we also saw total market cap out there hitting about 300 billion for the first time in over there in the crypto space. So interesting stuff. Again, a lot of people. Maybe this is other people come out who are the diehard crypto bears saying this is just a bear trap and all sorts of other fun stuff. So yeah, it's interesting stuff out here. Looking out, EOS up the most, over more than 30% over a 24-hour period by percentage. Again, there's so many coins, listeners. We could spend days getting out. Just came from the big World Federation of Exchanges event, and that's a pretty staid crowd. They don't usually dive into new products or new categories too readily, and even they were talking about crypto there. So it's kind of unavoidable. Everyone seems to be kind of saying we want to see more products out there, more listed lit products, and also, like us, more options out there, which is kind of interesting. Speaking of interesting, on a side note, since we're talking about crypto, since you dragged me down the crypto rabbit hole, Mike, it's all your fault. Really quickly here before we move on to the odd block. Interesting piece, probably maybe poorly timed, given the fact that we saw crypto and Bitcoin spike so hard today. But this piece come out of Bloomberg talking about a pricing model. We've seen different pricing models, technicals, fundamentals for stocks out there. People have argued and debated how well they apply or don't apply to crypto. In fact, we had Tony Colton from Prognos Analytics in here not too long ago saying his technical charts actually, it works even better for crypto than it would be for the underlying, which I think was kind of surprising to a lot of people, myself included. But people coming out of Bloomberg showing some study out of Barclays showing they say the best predictive model they've seen so far for crypto, in particular Bitcoin, is an epidemiology, so the spread of disease type model. And their conclusion is that Bitcoin has peaked. It hit its top value back in December. Of course, that came out today, right as Bitcoin was spiking. So poorly timed from a PR perspective. I don't know, Uncle Mike. I've heard technicals. I've heard fundamentals. I've heard, obviously, looking at the Greeks and volatility analysis. I've heard people carve up that cat a lot of different ways. This is the first time I've ever heard anyone telling me that there's some sort of epidemiological disease-related model that they're using to value anything, let alone crypto. Are you buying into that, sir?
I've looked at it a little bit myself, not to say that you just mentioned, but I've tried to kind of correlate a little bit to the metals, and I haven't been able to do it in any way. Just from the standpoint that with at least Bitcoin, the king of all cryptos, so to speak, being down nearly 50% since December, you'd think that gold and silver would have more of an uptick if there was a correlation, and there obviously hasn't been. So I think it's too early to tell with something like that at this point. With a correlation, it's kind of like maybe I remember like 20 years ago they always used to say if the AFC team won the Super Bowl, the market would go down, and if the NFC won, then the market would go up. But not really seeing correlation to epidemics and Bitcoin.
They say, Uncle Mike, if you haven't seen the correlation, it's not looking hard enough, sir. You can make any data set fit if you want. Speaking of data, it's time for us to crunch some of our own. It's time to break open the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the wonderful, the head-scratching, just bizarre paper that is catching our eye out here today. We always like to start things off in the land of Tesla. You guys love it or hate it. The market didn't like it so much today. In a day when everything else was rally-ho mode, Tesla off over 2%, nearly 7 handles to end the day right around 294. So shy of that all-important 300 level. I know a lot of you like to trade in and around that level. So hopefully you've learned a little bit from recent recent forays to the dark side and have mitigated your risk accordingly. Let's kick things off, though, in these funky catastrophe puts we like to look at a lot here. These are the Jan 2019 50s that have garnered so many headlines of late. 48,000 open on this strike right now. So these things just continue to have some love. About 200 going up today. Actually, a quieter day so far today than we've seen recently, with 2,000, 4,000, 8,000 more trading, 11,000 trading some days out here on this strike. They're $1.50 at $1.60, so they're still pretty much roughly half of what they were just, a few sessions, a few weeks ago out there in good old, talk about these puts just moving and shaking. These things have been rocking and rolling quite a bit of late. I'm sure we're going to get some love for these as well. Still not so much love for anything in the March 2019 timeframe. People seem to like their nice, easy calendar years lining up. That probably also lines up more with the CDS hedging theory because they probably do theirs maybe on a calendar year basis as well. So Jan would work out maybe a little bit better than a March contract there. Speaking of Jan, let's go out to Jan 2020 for the 50 puts there as well. About 11,000 on the tape total open interest out there right now. But again, about 200 going up today as well. So a pretty active day for those ones, because that's usually a little bit lighter. But still, those strikes continue to show some interest. Uncle Mike, 100 of the Jan 2020 20 puts also going up today for about 900, almost 1,000 open there as well. So Uncle Mike, I know you were a little skittish about the 50 puts in 2019 or 2020. You thought that was a little bit out of the money, but the 20 strike, that's got to pique your curiosity, right?
Of course. I'd love to own Tesla at 20. Not. If that went down to 20, I really don't see it stopping and going to zero. So I think the 20 is kind of a more logical play, quite honestly. I guess maybe if Tesla were to go that low, I'm just trying to think of any case that I would have for selling a 20 put. And the only thing I can think of is maybe they have some type of a patent of some sort that the person that sells the 20 puts might think, well, if Tesla has the patents, then they can probably get sold for around the 20 level. So maybe that's their motivation for selling them. But in reality, I think that if it were to go that low, I think it would just go, I don't think it would stop in that area. I think it would go to zero.
Got to say, I'm kind of with you on that one, sir. I don't think the the 20 strike, if you're looking for hedging outright, probably not going to do it for you. What might do it for you, though, are the 12 half strike puts out there in CNHI. This is CNH Industrial. You may recall, listeners, we talked about these a few weeks back on the show on the 22nd of March. Excuse me. At the time, we saw someone, by the way, this one closing today, $12.20. This is an average, name averages about 300 contracts a day. So squarely in solid odd block territory. Today, doing about 1,200, actually pretty active. 1,250 to 1 puts over calls. There were 1,250 puts and 1 call trading today. So some action out here in the puts today. And all the action of interest, actually, was pretty much all that action was on the strike we highlighted last time, which were the April 12 half puts. At the time, you might remember, listeners, paper coming in and sweeping the April 12 half puts for 7,500 of these things, just scooping them off above the offer, doing it for pretty much about 50, 51 cents on some splits out there, doing it total about 7,500 times. So a lot of interest in these bad boys. And coming into today, 7,500 are still open there. So it seems like our friend there, at least so far, is standing fast. Probably has something to do with the fact that he traded them for around 50 cents, and they're 35 cents at 40 now. So about a dime, 15 cents in his face right now. Of course, of interest, I mentioned 1,250 puts did go up today, and of all those puts, all of them went up on these April 12 half puts out here. So perhaps we saw a bit of a partial close. You saw a block of 1,000 going up for 41 cents, or maybe taking the hit for about a dime on those bad boys if he is indeed closing. We saw some smaller blocks, 200 trading for 35 cents actually. So perhaps our friend realizes the clock is ticking. If he was outright specking, then perhaps he's looking to close it out, or perhaps also even if he was hedging, he decided, you know what, he still has a little bit of juice left to go, but with 8 days left, these are effectively a weekly, and they're going to start eroding pretty quick, so maybe he's deciding to take a little bit of his exposure off the table and take the hit. Uncle Mike, if you were buying these right now for, let's say, a hedge, and you had them with a week to go, I know you probably wouldn't play this soon in the expirations. I could probably go out a little bit farther. Let's just create the scenario that you did this, and you like to play in these near-term months. And you had a hedge coming up, you had like 8 days to go, and there was still a little bit of a juice in it. You paid 50 cents like this guy did. They were 35 cents at 40. would you consider rolling them now? Or, I mean, I don't see any other side of the roll. He's just taking them off. Would you consider taking some off the table and just live to fight another day? How would you manage the 7,500 you got going here?
Well, I mean, with this, when you have, if you're at 35 cents by 40 and you lose a dime on it, that's not exactly a bad thing in the world of hedging, depending on where the underlying is going. Because remember, hedging costs money. Oftentimes people believe that hedging is something that, I just put a hedge on, I'm smart, and that mitigates all risk, and I can still have the upside. Oftentimes, no matter how much you explain it to people, that somehow is what they think hedging actually is, and it's clearly not. So in this case, by losing that little money hedging, typically I would view this as a win, even though in the account it's a loss.
Yeah, I'm just looking here at the charts and how this one has performed since we profiled it. The stock was kind of unched net from when we talked about it on the 22nd. The stock was about 12.30. It's 12.20 right now. So, but in between, about a week or so ago, the stock got down to about 11.5. So these puts were looking far juicier than they are today. So our friend, if he wanted to take these off, he had a much better opportunity to do so. Back about a week ago or so. Let me see if I can pull up the chart and see how high these puts actually got. Let's see. They got up to about 90 cents on the 6th of April, and 95 cents actually. These are the only time they actually printed us, whether it's quotes, back on the 4th. So he had a couple of chances, Uncle Mike, to take them off for pretty much double, and he sat on them. So maybe he's regretting that a little bit right now. What do you think?
Maybe, yeah, I would think so, because as a hedger, you're trying to walk the fine line of not being a short-term trader, but yet not being dumb, and as Andrew would put it, doing stuff. So he might have some regrets on it, but all in all, though, losing 10 cents on a hedge typically is not a bad thing, I don't think.
Yeah, net is not, of course, when you have that potential doubling in there lurking and you feel bad about missing that. That could mess with your head a little bit, but other than that, it seems all right. It's a shame the Rock Lobster and the Meatball are having technical difficulties today because we're coming up to a name that I know they both love so much, which is L Brands, ticker symbol LB. They of Victoria's Secret and other brands fame out there. This one closing today, 36.17. I got another one taken on the chin on a strong up day for the market, off nearly 5%. Out there. I don't know what the news was on LB because we weren't looking at today's activity, even though they averaged about 9,600 today, doing about 19, almost 20,000 contracts. So pretty active day out here for L Brands. But instead, we're going back to what we talked about in this name back on the 8th of March when we profiled someone drawing a pretty aggressive line in the sand out here in the April 37.5 puts. These guys going for huge chunks, 20,000 of them trading for 45 cents, coming right on the bid, just crushing the bid out there. Total, I think, volume on the day was about 25,000, I believe, overall, but 20,000 in that one block. Again, selling these for 45 cents. The stock is since, let's see, we did these on the 8th. Let's see, the stock is since, it was a little bit higher. It was on the 8th, it was about $44. Right now, the stock is 36.17, so about 8 handles in his face right now. That means these puts are a little bit in his face too, to the tune of about $1, a little bit more. He sold them for 45 cents. These things went out $1.50 at $1.60, listeners. So that probably would explain why he's still open on this strike. 31,000 open on this strike. I'm going to guess our friend here probably is going to take himself some stock at the end of the day rather than buying these puts back. Usually you see this kind of size, usually an opening sales like this. Usually that's someone, as we like to say, drawing that line in the sand, meaning when the stock gets below that level, he's willing to take some stock for his own personal account there, or in this case, his firm's trading account. Again, looking back at the year that's been, this name has been, started off the year right around 47.5. Got as high as 63 back in December before kind of taking on a long, slow downward spiral, except for in January where they just got clipped pretty aggressively. So it's been an interesting time. Perhaps not the best time to be short some puts. Mr. Uncle Mike, if you have 20,000 puts that are in your face for $1, you're probably going to take the stock. Am I correct?
Yeah, and just regard to this name, my wife won't let me trade it, so I really can't follow it that closely. So, but yeah, I think in this case, if you have that, there's really no reason to hang on to it unless you're going to plan on owning the stock. I suppose if it is in your face that much, it always can come back, so you never know. But maybe in his mind, he's already long the stock.
Yeah, probably is. At that point, he's probably saying to himself, yeah, you know what? I pretty much have the stock from my level. And he's perhaps okay with it. So let's do a couple of quick check-ins here as well. We highlight a lot of names on the old odd block. Somebody's like to check in, see how they're doing. Went back on the 26th. We talked about someone drawing another size line in the sand. Over 175,000 of the March 25 puts in Dix, DKS. Again, blasting them out for a nickel. I remember the Rock Lobster at the time not being such a fan of these bad boys. Let's see, looking here back at, of course, March is off the board. I'll have to dig in later and see on the open interest exactly how they went out. But in the meantime, it's pulling up here a little chart of where Dix has been since that trade and through March expiration. Looks like we flirted with the 30 handle on the 2nd. Got as low as about 29.5 on the 13th, and never throughout the rest of from March expiration, never threatened the 25 line. So our friend took home bucks, 175,000 nickels on this one, it looks like. So a little bit scary, not perhaps the choice I think a lot of us would make for how much to be compensated for your line of sand. Remember, at the end of the day, you're taking some gap risk and some other risk by selling those puts. So it's nice to be compensated. It's better than just working a limit order. But as Uncle Mike broke down in one of his strategy boxes recently, the differences between the two of those and pros and cons of each. Maybe you want to check that out if you want to go back to our archives. But a nickel, I think most of us probably wouldn't. Uncle Mike, does a nickel 175,000 times? At that point, are you going to work a stock order instead?
You know, I always think of the old firm Long-Term Capital Management back in the late 90s and how it almost ruined the entire financial system as we know it. And what they did to levels of far beyond any of our comprehension in terms of leverage was trying to just sell out of the money options, insanely out of the money and with insane amounts of leverage. And they made a ton of money doing it. Until there is actually a problem, and when there was a problem, there was a problem. So doing things way out of the money, oftentimes it works, but when it doesn't work, it really hurts, and it really hurts real badly. So I would be very cautious of doing that.
Yeah, this guy managed to skate. Of course, we talked about on the show that day, tying up that much capital for that long, for a nickel plus commissions and everything else. Probably end up more of a wash than anything else. But still, he did collect his proverbial, looks like 175,000 nickels. So I guess hats off to him. I don't know, we'll squeeze in one more quick one here before we roll on into the old Uncle Mike block. Just a quick one, because our buddy Henry Schwartz, the flow master over there at Trade Alert, sending this one in. I thought it was kind of interesting. You guys like to sling a lot of Facebook. A lot of people have been talking about Facebook bouncing, and of course the testimony this week. That was a big deal. Everyone kind of carving that up a lot of different ways. Well, Henry pointing out here, someone did pretty well with a nice call fly with a put sale kicker. It ended up making about 300% in a couple of sessions in just 4 days. After Facebook shares up about 4%, someone paid 81 cents for 5,000 of the 172.5 call flies expiring on the 13th. So doing this in the weeklies. Did that on Monday. Also turned around and sold 5,000 of the 147 puts for 31 cents. And then turned around and took the whole thing off on Thursday for a $2.06 credit. Shares are about 159 when he entered, 165.5 when he got out. So I don't know, not bad. Uncle Mike taking about 300% in a couple of sessions. You guys, I know you guys like some big names in the strategic night. First off, what do you think about this well-timed call fly with the extra put kicker that made it extra juicy? And then B, are you guys slinging any Facebook in the strategic night these days?
No Facebook at this point, unless I haven't looked at it in a couple days with that, but no Facebook at this point. And in terms of this near-term fly trade with the kicker, I love it. I think that's fascinating, and I enjoyed watching Zuckerberg's testimony. I watched quite a bit of it, actually. I didn't trade anything with it, but I thought that was really good to watch. And I typically don't try and make myself out to be a Democrat or Republican, well, seeing as I'm really not one of either, quite frankly. But I thought he did a really good job, and for what he had to do there, I thought he did really well. And curious to see where Facebook goes. If you're bullish on Facebook, it might be a buying opportunity.
Speaking of buying opportunities, let's break it down and see if Uncle Mike has some information on buying or selling. What he's got to talk about, because we got to break down your votes next. It's Thursday. It means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, time to break down. Uncle Mike will be breaking down for us via the magic of cellular telephone. He's in the mobile office right now. We'll do what we can to make sure you can hear him, not in the wind tunnel there, listeners. But let's see. We gave you guys choices. We said, what do you guys want, Uncle Mike, to break down on today's strategy block? Gave you 4 choices. When to close out your shorts, hedging versus using stock as like a stop loss. So hedging with options versus using a stop loss in the stock. Easy for me to say. Trading collars within portfolio margin accounts, or selling covered calls in a falling/down market, usually when you're below your entry point. Uncle Mike, what do you think won our poll right now with like a minute to go here?
Well, I think I'm going to go with what was winning earlier. I believe that it was closing out your short options.
You are correct, sir. 36% choosing that. 28% covered calls rally in there. 28% saying covered calls in a falling market. Only 27% hot on its heels with trading collars within a portfolio margin account, and only 9% going for the hedging versus the stop loss. I think you set that one up to fail, sir. But that, c'est la vie. When to close out your shorts. Our audience has spoken. Uncle Mike, have at it, sir.
All right, when do you close out a short option? Well, let's go through all the scenarios. Let's go through when it's going your way, when it's not going your way, when time's on your side, when delta's on your side. Let's just break it down and let's close out some short options, baby. What I want to go through today, let's just say that you're selling a put. XYZ stock is at $53 a share and you're selling the 50 put. Now, you can apply these rules to vertical spreads. You can apply them to portions of calendars or diagonals, but just to keep it simple for today, let's just say that you're selling a cash secured put. You sell that 50 put for $1. Well, my general rule of what I like to do is, and let's say that we don't want to own the stock. If it starts going down at some stage, we just want to get out of it. We don't want to own the stock. So my general rule, let's assume a few things. Let's first off assume the stock goes up, the stock then will go down, and then the stock stays the same. All right, so if the stock goes higher, then theoretically the value of the put goes lower. It will 99.9% of the time, unless we run into markets like we did in early February when Vega can trump Delta. It doesn't happen often, folks, but it does happen. We witnessed it in early February. I think I even talked about it a little bit on the show. So let's say the stock does go higher and the value of the put goes lower. My general rule of when to get out is when you have roughly 80% of the intended credit. So in other words, let's say that you have, for example, you sold it for $1. When I like to get out is when that puts it around 20 cents. And here's the analogy that I like to use on it. I want you to, and you don't have to do this literally, but just even do it in your brain. It's a pretty easy example. Take a paper towel and fill it with water. Get the paper towel nice and wet, and then that paper towel is soaking wet. So now you squeeze out the paper towel as hard as you can. I mean, you're putting a death grip on this thing, and you're just squeezing and squeezing and squeezing. That paper towel is not going to become 100% dry. It's always going to have some type of dampness to it. I don't care how hard you squeeze. So with that being said, when you squeeze that paper towel as hard as you can, that's the analogy that I like to use for what that option is when it gets about 80% of the premium out of it. That last 20%, if you're hanging on to that, that is very difficult to get out of. And unless the stock just goes to the moon, you're going to be waiting until expiration or pretty close to it to get that last 20% out of it. I've just spent too many years in this business trying to get that last 20%. And trust me, I can't squeeze hard enough to do it. And likely you won't be able to either. So if the stock goes higher, 80% is about the level with which I like to get out of it. Now, the next thing that we can talk about, at what level, at what point in time do you get out of the option should the stock stay the same? Well, I think the same rule can apply, because at some stage you're looking to actually get that money, and maybe a week before expiration, maybe a few days before expiration, who knows when it's going to occur. Maybe there's a big vol drop in the stock and the stock doesn't move at all. Well, at some stage, you're going to get that opportunity if the stock never moves. Once again, I want to revert back to that 80% rule. If you want to just sit and wait till expiration for that last 20%, it's going to be as frustrating as trying to squeeze a paper towel to be 100% dry. So now, the final scenario, let's say that the stock goes lower. Well, my rule on the want to own the stock. If you want to own the stock, just let it go down and let it get put to you. Let it go in the money. If it's a hold for a stock, you're doing a wheel trade or something along those lines. In fact, I have puts that are in the money right now that I'm fine with. I'm just looking forward to it becoming stock and selling some calls next week or the week after. But if you're looking to not get into the stock, I think this is an extremely important rule for downside risk. I think that assuming you sold the put for $1, I think you need to get out when the value of that put becomes $2. Reason being is that I believe that you can live to fight another day if you lose $1. And the reason I say that is, let's say you're consistently doing this strategy for the next month. Then the next month you sell another option for $1.20, and even with that 20% rule, you can pretty much come close to where you were the month before. However, the fact that you're short that option, that $1 put that you sold, can quickly be at a loss of $26 if you let it. And you can't let that happen. Now, if it's a buy and hold stock that you're trying to get into by selling a put, that's one thing. But if you're trying to sell a put spread, if you're trying to do a levered naked short put sale, if you're trying to do anything that involves leverage, or you just flat out don't want to own the stock, then I think you need to get out when it gets to the $2 level. Now, another method with which you could put a contingent order in to say, as soon as the stock touches $49.99, get me out of this put option at the market. That's another way with which to do it. But you got to be careful when doing that. There's gap risk. I guess there's gap risk even if you were doing the method I just talked about. But you got to be careful with doing that method because of the fact that if for some reason we have an increase in volatility, and then after that, the stock goes lower, you might not be getting out at exactly that level. So I think that if you follow those rules for what if the stock goes up, what if the stock goes down, what if the stock stays the same, and you ask yourself that before any trade you make, whether you're bullish, whether you're bearish, whether you're neutral, I think you'll have a fair amount of at least you'll have the ability to stay in this trading game longer than had you not had those rules, and you end up taking a $1 trade and turning it into a $26 loss.
Some people can certainly probably empathize right now with what happened in Tesla recently. So maybe we should have done this lesson, a strategy block, a couple of weeks ago, but better late than never. Speaking of better late than never, it's time for you guys to squeeze in a little bit on the show here with a little bit of an abbreviated mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where you guys take the reins, questions, comments, insights, slander against Uncle Mike. No, we won't take the latter. And all sorts of other good stuff. Hit us up. You know where to find us. The website, questions at the Options Insider, at Options on most of the major social media outlets. Or in the live chat. You can hit us up there, too. No shortage of ways for you guys to make your voices heard. We also like asking you guys questions. Like this week, of course, we talked about the Spotify options listing back on the 9th. Seems like an eternity ago, but c'est la vie. Lots happened in the market since then. We said Spotify, the latest hot IPO to join the options market, but so many of these recent options listings, they started off pretty hot, then they kind of cooled. So we have to ask you guys this week, which recent hot IPO do you think you'll still be slinging options on this time next year, so in 2019? Gave you 4 choices. The aforementioned Spot, DBX, which is Dropbox, Snap, needs no introduction, or other. And you guys could send in some ideas. Uncle Mike, which of these 3, I know you're not trading any, but let's just say for the sake of argument that you are, or were inclined to, which of these three do you think you'd be most inclined to trade and continue to trade a year from now?
I would say Snapchat, and quite honestly, I'm surprised it hasn't gotten any options on it so far. And I do have a client that insisted that I buy him some Snapchat, so I do technically have, I believe, 50 shares of Snapchat in my AUM. So, surprise of the day.
That is quite surprising. Yeah, it is. It is trading closing today, up nearly 1%, 12 cents for a cheap name like that. $14.92 where it closed. This name is actually doing decent options paper of late, doing 91,000 contracts a day. Today doing 58,000. So obviously recently we saw some nice spikes in volume out there in Snap. This on again, off again. Is it dead? Is it not dead? Oh, here it goes. It's got as high as 21 and a quarter, so back, not that long ago, back in, right on the heels of the great meltdown. They had their earnings kind of on the 6th, actually, of February, an inauspicious day to announce your earnings, because guess what? You're moving with the market regardless, but they moved up higher the very next day, got up to 21 and a quarter, kind of since have been bouncing around, and these days back to around shy of 15, so kind of been all over the place. Uncle Mike owning a whopping 50 shares. What do you think, Uncle Mike? Maybe you're going to swap out some shares, maybe do a little stock replacement? What do you think?
No, I'm just going to kind of leave it there and appease the client that really, really, really wants Snapchat and just kind of leave it at that.
Yeah, with the death of minis, kind of hard to do a half lot of a stock replacement out there with only 50 shares to go. Here's actually an interesting question. This one came in probably looks like a week or two ago, so I guess we're a little late answering. We've been kind of busy. Kill us. But this one actually is well timed with what you just talked about, Uncle Mike. It's kind of follow on the heels of what you just laid out in your strategy block. This comes from Ladmos. He's saying, hey, I'm feeling the pain on this Tesla rundown. Probably should have rolled my puts last week rather than waiting for this week because they are now in the money. This is back when the stock was, I think, hadn't broken 300 yet, so maybe like a week and a half ago. He says if the stock hits 295, spoiler alert, it did, and then some, listeners. Stock hits 295, then I'm definitely pulling the trigger. How do you guys determine when to roll? Is it stock-based or option/price/volatility-based? Well, hopefully, Ladmos, first off, hopefully you stuck to your guns and you did close out at that 295 level, because otherwise you had another 40-odd handles of pure joy, actually 50-odd handles of pure joy on the downside to sweat through and probably get stopped out at a much worse level. So hopefully, like Uncle Mike said, you stuck to your guns, you have your rules-based approach, and you know when you want to get out. Uncle Mike kind of just broke this down for us, so I don't know, anything you want to add here regarding Tesla puts, Uncle Mike, or just in general, some last thoughts on closing out your short puts?
No, I think, in a situation like that, yes, hopefully he got out of them. But the other hope would be if he wants to own Tesla for the longer term, that's the only thing that I could see him wanting to be in, because then once he is in, he can do maybe a 1-by-2 ratio repair strategy, which we've talked about on the show. But other than that, for his benefit, I hope he just got out.
Yeah, I mean, obviously, if he stood past, he's actually, stock's pretty much unched where it is right now from a week or a half, 2 weeks ago, whenever this question came in. So I guess if he stood pat, he's all right, but we can't advocate that. That's dangerous, particularly you had a lot of sleepless nights and probably your wife tapping you on the shoulder saying, what are you doing? What's this massive loss in our account? So all those are scenarios you want to avoid. Here's an interesting one, Uncle Mike. I don't know if we have time to really dive into the nuances of this, but it's a fun question. This came in from Bob Thompson. We have similar themes like this before, but it's actually an interesting one to bring up again. He says, pretty simply, I'd like to know the best option strategy to use with a small account. And this kind of dovetails on some questions we've answered recently. Some people asking, how do people afford to sell puts in Tesla because it's so expensive and other things. And Bob and others have kind of asked similar questions like this. And it is one I could see a lot of people having, because a lot of the strategies people like to employ, like even we just talked about, basic selling puts, a lot of those require a lot of capital in your account to put aside for buying the stock if you get it assigned to you. Or a lot of the other spreads we talk about here, or not just spreads, but outright trades, require a lot of capital if you want to actually do this kind of stuff. So this is an interesting one. Covered calls, they obviously require the stock leg. So anything that's going to require any sort of risk of getting underlying in and around you is going to require, spoiler alert, a lot of capital for you to have aside. So those are probably not the way you want to go with your small trading account. Uncle Mike, you said we probably could go for quite a while. Maybe we'll revisit this topic in a future show. But some quick thoughts here for Bob Thompson. You have you just mentioned someone doing 50 lot of Snap stock. what do you like to typically, what do you typically counsel your clients who are coming to you, let's say, I don't know, $5,000 small for an options account, small account, and what strategies you like to start them out with?
Well, I think if you're in that situation and you really want to be dedicated to the trading, I think the best route to go is if you deem volatility to be high, vertical spreads. If you deem volatility to be low, horizontal or diagonal spreads, with a kicker. And the kicker is that you really have to be very close to the computer in that if it starts to go against you, I think you need very little room for losses because of the fact that one large loss, and that can really put a damper on your account. It's the old adage. Let's say that an account loses 50%. Does the account need to make 50% to get back to break even? No, the account then needs to double. So I think that doing those those strategies, along with very tight stop loss parameters, would be the best way to have a chance at growing a smaller account.
Yeah, I definitely like the verticals. Diagonals get a little bit tricky because A, it assumes a bit of savvy on the part of the end user, which they may or may not have. B, different brokers can tie up a lot of capital if they're less option savvy with diagonals than others. So that gets a little bit tricky. You could eat up more of your options buying power and trading power than maybe you think with different brokers, depending on how they establish the margin on all those funds. And of course, like you mentioned, the diagonal, you could things could move against you pretty quickly. So a little bit of savvier, that probably would be maybe a second order type once you're a little bit familiar. If you're just starting out, keep it basic. I think verticals are a good way to go. This is an interesting topic. I think when you have more time, maybe we'll come back to this and address it in a little bit more length. Maybe in a future options boot camp, this might be a good topic for that as well, which is kind of why I want to bring it up and kind of percolate it now, get the juices flowing on this one, because it's a topic a question a lot of you guys have out there, and it's a good one to explore at length. Unfortunately, now we have to keep on rolling and explore at length what's coming up in the market. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Uncle Mike, if you were paying attention this week, even if you weren't, we had the trade wars fears kind of quieted. Then we had Syria on the radar again and escalating. Everyone stopped getting worried about the tweets about the trade war, started getting worried about the tweets about missile attacks and a bunch of other fun stuff. So it seems like we're just jumping from one crisis, not scandal, but one crisis, one development, one macro bit of craziness to the next. So we saw a little bit of rally ho mode. Hopefully cooler heads will prevail and we'll see tensions easing out there. But then when we have the commander-in-chief promising massive, devastating attacks out there, then in Syria and elsewhere, then how low can these things really go from a vol perspective? So it's kind of a bit of a tale of two cities. We saw good news and we saw bad news. This is seems like the roadmap we're kind of playing out here these days, where on the one hand, the good news that comes and the other shoe drops and we're right back to where we were again. So all that is a long way around to saying, Uncle Mike, what are you watching for tomorrow's session into the weekend?
Well, I think it's exciting now because not to mention all those things that you mentioned are at least visible to the market. So it's out in the open. Whether it turns out to be good or bad remains to be seen. But the other benefit is that the Zuckerberg testimony is all done now. That was another thing that was very prominent in terms of what the market was looking at. So I think that with all those things done, I'm about to say something very exciting. We're going to just be able to look at earnings. How cool is that? Actual stock performance and how in relation to how stocks will perform. I think that's a very exciting time, and I'm looking forward to the next few weeks to see how stocks perform based on earnings. I think that with the tax cuts, this will be the first quarter of where we're going to actually have the tax cuts factored into earnings. So overall, I think earnings are going to be very good, and I'm looking forward to it.
I'm definitely with you on that one. I'm very much looking forward to sinking my teeth in some nice, concrete, and discrete straddles and vol levels and earnings numbers and net movements in the underlyings and things that are much more decipherable and digestible as opposed to the vague mysticism that is the macro world sometimes. So I'm with you on that. Looking forward to that. Netflix, probably the name a lot of you guys are most eager to kick off. That's coming on the 16th of next week. So that's coming up pretty much on Monday. And then we're kind of off to the races. Netflix is off in the Widowmaker. So one I know you guys like to sling a lot, right around that same level as Tesla. Now maybe there's some interesting questions or polling to be done on that. Tesla versus Netflix. Which would you rather have at around $300? Interesting question. But yeah, I'm with you, Uncle Mike. I'm looking forward to all that good stuff as well. We can't put the macro in the rearview mirror because I have a feeling it's going to rear its ugly head throughout earnings season. But that said, it will be nice to drill down into some nice earnings for a change. Listeners, that music means we've come to the end of a Rock Lobster and Meatball free session here on the old Option Block All-Star panel. Me and Uncle Mike holding down the fort, which is fun. I got to run and get back to this conference, Uncle Mike, so I can't be out here playing and having fun with you guys all day long, even though I would like it. So, of course, they weren't here, but we'll throw them a plug anyway. Head on over to @OptionPit on Twitter, @OptionVol on Twitter as well. Follow those two dudes, and head on over to OptionPit.com. Register for the Rock Lobster's newsletter. He's actually on assignment. He's going somewhere. I don't know where the Rock Lobster goes. He never leaves Maine, so that's a bit of a huge development in and of itself. Spoiler alert. Let's track him, and we'll see. We'll put a little tracker on him. We'll see where in the world is the Rock Lobster going forward. Uncle Mike's also headed somewhere. So before he gets there, let's bring him on. Uncle Mike, if I'm just done with all this up and down, this yin and yang of the market, this return of vol, this Syrian thing, I want someone to just say Calgon, take me away. But instead I say, Uncle Mike, take me away. Where should I go? What should I do?
Oh, by all means, contact me, 312-212-3531. Shoot me an email at mtosaw@rcmfs.com. Would love to work with you. I'm a financial advisor that is not afraid of the word theta.
Ooh, theta. I know from firsthand experience, listeners, he is terrified of Rho, so don't bring that up to him. Theta, he's okay with. A little bit of Vega, Rho, forget about it. He runs screaming from the room. All right, hit him up if you want to talk about those first two Greeks, not so much the latter there. Hit him up, mtosaw@rcmfs.com. I can see him scowling at me through the Skype right now if there was indeed a video connection. And on behalf of Uncle Mike and myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, voting in our polls, all the other fun stuff that you ladies and gents do out there on a regular basis. And we'll see you back here next week for earnings. That's going to be fun. And for another session of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.